Hi everyone, today I will tell you about a very cool scalping strategy that works on cryptocurrency markets on any time frame. This is a very simple strategy that is easy to understand, but at the same time it's one of the most effective strategies with which I myself trade. Do you want to know a little more about this? Then we begin. Well, before I start, I want to share the cryptocurrency exchange again, which I use myself. As you remember, I allocated $20,000 to the Coverstein section. Now you see my profit, which I received passively due to the fact that my funds are traded by top traders whom I choose. Let's see what happens next. By the way, to get a bonus you need to register using my link and you will get a crazy bonus on your first deposit. So let's move on the strategy. As you remember, I already said that this is a very simple but very effective strategy. So to start trading on this strategy you need to use the classic Fibonacci grid. Fibonacci is located on the left in this window. Click on it and select the Fibonacci retracement tool. First, you need to configure your grid. Stop the video at this point and copy my settings if you have any differences. It's important to understand that we will work on a logarithmic graph. In the same way, we must work on the logarithmic Fibonacci grid. Be sure to check this before you start working. So, what is the point of this strategy in general and how can you use it? Let's start with the fact that the price of any asset moves up and down. The price doesn't move randomly up and randomly down, unless of course we are considering the case with manipulations, but we will analyze this point a little later. So, we realize that the price moves with certain dependencies. Any price movement is an impulse. The impulse must always be adjusted. It doesn't matter how much time will pass before the correction, but any price movement, whether it's up or down, it's impulse that should be interpreted in the future. Well, when we realize that the price movement is an impulse that should be corrected, we can assume that corrections also occur according to certain dependencies. So let's go directly to the price chart where I will explain everything in detail using specific examples. Now we will look at the daily Bitcoin chart at a completely random point so that you don't think that I'm adjusting the strategy to the price chart. So now let's look at an example of a locally uptrend. Here we see an impulse. An impulse is a candle up or down that hasn't been adjusted to at least 0.5 levels according to the Fibonacci grid. When you see an impulse that hasn't been adjusted to at least 0.5 levels, this means that sooner or later this momentum will definitely be corrected. Well, let's see it on the graph. So we see a strong impulse that we notice because of this big green candle. After that, we take the Fibonacci grid tool and connect the beginning of this candle with the end of this candle. Then we see how this candle begins to adjust to our cherished levels. We're interested in these three levels: 0.382, 0.5 and 0.685. This is called the golden section according to Fibonacci. The meaning of this section is that historically, absolutely on any segment of the chart, you can see how the price will always work out between these levels. And since we have determined that any impulse should be adjusted to at least 0.5 levels, we can enter the trade by buying an asset on the correction of this impulse, placing our limit orders at levels 0.342, 0.5 and 0.645. So let's see what will happen if we place limit orders at these levels in advance. We see how the price reached our limit order at 0.342 level after this massive pump and then went up, having worked only one level out of three. The price hasn't reached the 0.5 level, which means that this momentum hasn't yet been fully adjusted. But we could already take one successful trade by placing a take profit at the 0.236 Fibonacci level. Well, let's assume that we took this trade and got a profit, but since the price hasn't reached the 0.5 level, this means that we need to pull the Fibonacci grid higher, connecting the beginning of the pulse with the potential end to find a potential entry point into the trade. We pull the grid higher and we are waiting for the market to give a correction. which means it will give a potential entry point to a long position. So we see that over time the momentum continued, but they gave a good correction with one candle taking away our limit orders, which we placed as this momentum moved. As we can see, we were able to pick up limit orders at all levels. After that, we set the take profit to 0.236 level on the Fibonacci grid, and as you can see, the price came there, which gives us a profit from this trade in the amount of 5% without leverage. So let's compare the results a little. We see a strong upward momentum in the form of a green candle. After that, we connect the beginning and the end of the momentum using the Fibonacci grid. We set limit orders at the levels 0.342, 0.5 and 0.618 and take profit at the level of 0.236. Let me look at a few more examples of any points of the chart. So we see a strong upward movement. We begin to stretch the Fibonacci grid, connecting the beginning of the impulse with its potential end. As we see, there was no connection to the 0.5 level for a very long time, but at some point it happens and we take our limit orders at 0.342 and 0.5 levels. After that, we see a massive upward movement of the price. The price again comes to the 0.236 level, which again gives us a profit deal with 14.5%. as well as an understanding that the movement is adjusted. Let's look at another example. We see a massive pump for several days, then we see a correction to the 0.5 level, after which the price returns to the 0.236 level again, where we again fix a profit of 5.31%. It's also important to understand that we can only pull the Fibonacci grid from the candle that wasn't adjusted by the next candle to 0.5 Fibonacci levels. That is, if the candle was adjusted by the subsequent candle to 0.5 level, but the momentum continued, then we should pull the Fibonacci grid from the new, not adjusted candle. This trading strategy has a very large width rate and works itself out on any time frame at any point on the chart. But I want to say a very important thing. The price doesn't always reach the 0.236 Fibonacci level, as for example in this example when the price adjusted to the 0.5 level after the impulse, but then returned only to the 0.342 level. The price will always work out between these three levels inside the golden section according to Fibonacci. That is, if you opened a trade at the 0.342 level, you need to close it at the 0.236 Fibonacci level. If you opened a trade at the 0.342 and 0.5 levels, you should close the trade at the 0.342 level, since it will be safer this way. Well, if the price has collected all three levels, then you should close enter by 0.5 or 0.342, depending on the market situation. But I usually close at 0.236 level, as it works out very often. Put a stop in these transactions for level 1 according to Fibonacci. I hope you caught my idea, and we are moving on the next very important part of this strategy, manipulation. So sometimes there are manipulations in the market when the correction passes very quickly and doesn't work out any Fibonacci level. As a rule, when you see it on your chart, you shouldn't panic and cancel your trade if the price went down without working out any of the levels and immediately came to the 0.746 first Fibonacci zone. This is a very good opportunity to enter the long, since after this manipulation in 98% of cases there is a good technical rebound that will lead the price to at least 0.5 level. but most often higher. Let's look at this with concrete examples. We see a massive upward movement of the price, after which we observe a huge manipulation. The price went down without working out a single level, but the price remained between the 0.786 level and the first Fibonacci level. This gives us the opportunity to enter a long position. What we see after that is that there was a huge rebound and we took our profit trade again. Now let's look at another manipulation. As you can see, exactly the same situation occurred here. As a result, another profitable trade. Well, this strategy is called the Fibonacci momentum correction. You can also use it on balconies. It has proven itself well, as it has been working for many years, so you can check it anywhere on the chart and make sure of it. You can use it together with other indicators and trade successfully on any time frame, making $100 or $200 a day without having super large capitals. So that's it. I hope you liked this video. Don't forget to subscribe to my channel and put likes. Also go to my Telegram channel and join our friendly Telegram chat. That's all for now.